You're a serial entrepreneur. You've helped a lot of people achieve a lot of things. You've helped many people get their career started in businesses across the board. And so, what are you currently helping people do?
Well, what I do
2025.
right now under the company Natasha Tax and Credit is that I help individuals, entrepreneurs, and small business owners basically get their paperwork together. So when I say paperwork, I'm talking to both their tax profiles and their credit profiles. When we talk about entrepreneurship and small business, especially, taxes are kind of often overlooked and sometimes just ignored. And I want to emphasize the importance of having your credit standing in good standing as well as your tax standing in good standing, because together these are two aspects of your business that can really take you to the next level in the world of business. So that's the short answer. The long answer is that specifically I help business owners, entrepreneurs, and individuals with their LLC setup. I help them with their tax organization, and I help them get their credit on track so that they can qualify for credit cards, loans, and mortgages.
Awesome. So, how did you get into credit?
Well, I've sort of been interested in credit, I would say, for the last 20 years. And of course, my story starts with me, right? I maybe had some inquiries on my credit and I was just very curious about how to get them off. So I got into the world of learning how to write dispute letters and going to different agencies. And I never really got the results I was looking for. Uh, from there, I started kind of asking my friends, like, hey, do you have credit cards and what are your limits? And then I had friends with $10,000 limits and $15,000 limits. So I said, okay, there's something wrong with my profile because why can't I qualify for a credit card over $5,000? So back in 2021, I met some mentors and underwent a credit mentorship wherein, among other things, I realized that my credit profile was too thin, which was why I couldn't get higher level limits. So, kind of with all of that experience in my backpack, I began to merge my tax business with a new credit business, and Natasha Tax and Credit was born.
Understood. So, do you feel as if credit is the biggest challenge that entrepreneurs face starting off?
Credit specifically isn't the biggest challenge that entrepreneurs face. I think the first biggest obstacle that entrepreneurs face is actually making sales, right? Then, as we're trying to scale the business, we can have a conversation about access to capital, which is a big deal, which is, of course, dependent on your credit profile. So, one piece of advice that I give any new entrepreneur is that you absolutely never, ever, ever, ever want to open up a business with bad credit, because what we know is that businesses drink money, you know? So, you want to have as much financial resources going into a business as possible because you're going to need that money to carry the business for the first 2 to 5 years, because we know that 80% of small businesses go out of business within the first 24 months.
Why is credit so important?
Well, credit is increasingly the key component to do everything in life, from entrepreneurship to employment to home ownership to wealth development. And what a lot of people don't even realize is that for certain jobs, particularly within the federal government, your credit has to be at a certain standing, or else they look at you as a risk and won't even grant you employment. When we look at trying to purchase a home, it's become increasingly competitive with interest rates. The same with car loans. You want to go into a dealership or a mortgage broker's office with the best possible credit score so that you can secure the best rates, because I'm hearing increasingly about people getting 25% interest rates on a car loan, which is ludicrous. So, having your credit in place before you embark on these life long milestones is critically important. Everything from going to college to getting your first credit card to getting your first car to getting your first house to making your first investments, all of these decisions are predicated upon your credit score and your access to capital and credit.
Awesome and understood. So, what is underdeveloped credit?
So, underdeveloped credit, we call that a thin file. So, what is a thin file? Typically speaking, a thin credit file, and I suffered from this in the beginning of my credit profile, is when you just don't have enough credit. So, a lot of us might have 1 to 3 credit cards on our credit report and maybe a 680 to 720 score and think, oh, I have good credit. Okay, you do have good credit, but you have a thin credit profile. So what happens is when you go now to apply for credit cards, you're shocked that, okay, why am I only getting a $300 Capital One or a $500 Open Sky? It's because you have a very thin credit file with not a lot of trade lines on your credit, but also your trade lines are very low limits. So what credit lenders tend to do is before they grant you credit, they kind of look at your profile and see how much money you're already managing. And generally speaking, they'll only give you up to that limit. So for example, if I only have 3 credit card accounts and my highest limit is 2,000 and I go apply for a new credit card, I can generally only expect to get $2,000 on that new card. So when we talk about building out a credit profile, we're talking about building out history, reducing debt, and really putting your credit profile in a place that looks appealing to lenders. And another thing I want to say is that when we talk about credit history, anybody can pay a $200 Capital One off for 2 months, right? But when we talk about getting $20,000 limits and $30,000 limits, these lenders and underwriters want to see that you can manage higher limit credit cards over time, okay? And I emphasize that point of over time because your credit payment history is 35% of your credit score. So to go in there with maybe 6 months history and not many accounts, you're not really higher up on the totem pole to qualify for the larger lines of credit or personal loans.
So your advice is before you embark on any major life decision or purchase or business is if you have a thin file or no credit at all, you suggest building your credit, having, well, not having a thin file, and then approaching these purchases to take advantage of the interest rates.
Yeah, and I think what doesn't happen when we think of starting a business, we think about what we're selling, how we're going to sell it, who we're going to sell it to, maybe the marketing. What we don't think is the credit and the credit lines that this business is going to need and require to remain open. I'll give you a very specific example. About 3 months ago, someone contacted me saying she's opening up a daycare. Okay. She comes to me with bad credit. Okay. Like I said, a business drinks money. 2 months into the credit repair, the daycare is going haywire. She's not getting as many clients as she thought. She already had bad credit, which means she doesn't have any, kind of money sitting around to help subsidize the cost of the business. She has no business credit. So then she called me saying, hey, my back is against the wall right now. I don't even have the money to continue with credit repair. So this is a person who had I advised her prior to embarking on the daycare, I would have told her, do not even consider opening up a daycare until you get your personal credit and your business credit in line, because based on my experience, you're going to need at least $100,000 cash and capital to bankroll a brand new daycare. So that's what I'm talking about. To go into any kind of new business endeavor without having strong financial and credit lines is very, very dangerous, and you're likely to lose that business because, again, most businesses just go out of business because they run out of money.
So you brought up a thin file. For the audience listening, what are some of the key things that you look for to determine if someone has a thin file or not? Like, what are some of how many cards? What's the credit limits?
Okay, so when we talk about a profile that's ideal for funding, like what would a lender embrace? We're talking about a profile that has at least 8 to 12 trade lines, right? We're talking about a profile that has at least 2 credit cards with a $5,000 history. We're talking about at least a credit history of 2 to 4 years. We're talking about a credit report that has maybe 0 to 2 or 3 inquiries. And we're talking about a credit profile that has debt utilization under 20%. Okay. These together are all markers of a person who's in good credit standing. Because again, if I can look at your profile and see that, okay, for 2 to 4 years, this woman has maintained, $50,000 in credit, I have no problem extending her another 20, 30,000. However, if I look at your profile and see that your highest card was a $300 Capital One, no way in hell am I going to give you $50,000 because you have no experience managing this kind of money. And what we have to remember is that the goal of a bank is to get their money back. So they're looking at your credit worthiness because they want to ensure that they're going to get their money back.
Understood. Understood. All right. Well, what is credit repair and how does it work?
All right, that's a very good question. So most Americans don't know that there are federal laws that protect them and protect what creditors can put on their credit report, meaning, an agency can't just put something on my credit report that isn't correct or put something that's outdated or put something that's even somewhat incorrect. Like maybe there may be an error with my payment history or an error with my name or an error with my address. So credit repair is the process of leveraging consumer laws and approaching the credit bureaus and saying, hey, per certain laws, I have certain protections, and you're legally not allowed to report this on my credit, or legally these things have to be removed. So my role in all of this is to sort of be the liaison between the customer and the credit bureau and to work and submit different disputes, leveraging different laws to get the inaccurate or incorrect or derogatory items removed from their credit.
Understood. Understood. What is credit repair and how does it work?
Okay, to make it as simple as possible, credit repair is the process of cleaning up your credit profile and removing everything that's old, outdated, derogatory, or negative. The other thing that's really important about credit repair is this. Your credit repair should only contain the meat and potatoes of your profile, meaning you should have one name, one address, one phone number, and all of your credit accounts should be in good standing. You should have very minimal inquiries. So anything that's outside of that needs some sort of a credit repair process. Even small things such as wrong name variations or old addresses can link you to old or outdated debt. So we really want to clean up your profile to just make sure the minimum data is reporting so that you're not linked to any old or outdated debt.
Understood. And for the second part of how does it work as far as the repair process, is it something that you can do yourself or it's best to seek a professional like yourself?
Okay, so there are laws that protect Americans from having negative or incorrect information reporting on their credit. Anybody can leverage these laws on their own behalf. The problem is that the average person doesn't understand the laws, doesn't know the laws, and doesn't have time to go back and forth with the credit bureau, which is why typically people go with the professional.
Understood. Understood. So you mentioned that you added the credit part to your to Natasha taxes. So now it's Natasha Tax and Credit. So what's the mission of Natasha Credit, the side of the business you just added?
Okay, so the organization is named Natasha Tax and Credit, and I think, okay, I'm helping people get their tax situation together, which also involves sometimes helping them incorporate an LLC so they can, have the minimum tax burden. And with credit repair, I'm helping them get their credit profile together so that they can leverage that for whatever investments or real estate or whatever life they deserve. But I think together and in whole, my mission is really wealth development, right? How can we leverage your tax returns? How can we leverage your credit and really get you in the game of wealth development, which for me, that pathway has been real estate ownership.
Understood.
So everybody will have a different path. I love real estate. I love credit. I think everyone should own some sort of real estate. And I think everyone deserves to be wealthy. So that's sort of my thinking when I'm working with clients is not only how can I fix your credit, but how can we set this up to leverage the taxes and credit to really get you in a better net worth position so that you can really live the life you deserve.